thanks for having me. First of all, I should be embarrassed that you can ask how many people were students of mine, so I won't ask that. It's good to be here. I think it was about 10 years ago you had me speak, and I enjoyed it. You all even gave me an award that I hung up in my office, so it's good to be here. I suppose the reason I'm here is last spring I was nominated to give what's called a faculty lectureship at NDSU. It's kind of an honorary thing where they try to give you an honorary thing so you retire so they can take your salary for other reasons or something like that. That was a speech and it was kind of a hit. And then, what's his name, Dan? I don't know if he's here. Dan said, Bill, you got to give that speech to the group. So that's why I'm here. Of course, things are changing a lot in agriculture. Things have changed a lot since last April and May. Actually, I've given this speech kind of like this for the last 3 or 4 years around the world, in at least 5 or 6 countries. But it's changing a lot, and agriculture has changed a lot. I told my friend here before the speech, there's great opportunities in agriculture, great challenges, and it's very exciting to be involved, no matter where you are. And so that's what I'm going to be talking about. So, I guess the major themes I want to leave with you as a group, and I'll start out with that, is we're in the most intense, rivalrous, competitive environment we've ever had in agriculture. There's great opportunities and there's great challenges, but we're more competitive, there's more competition out than we've ever had before. And that's a challenge for us and an opportunity for us. So I'm going to talk about this competition that we've had. I'm going to talk about the new technologies in agriculture, where the challenges and opportunities are. I show this slide here because it shows the changes in export market share of the last, since the 1960s. Left-hand side is soybeans, upper blue is corn, the lower right here is wheat. And in every single case, you've seen the United States gone from a very domineering exporter across all crops to, in some cases, a minority player. And I don't want to talk too much about this, but we got a big problem here in soybeans in Argentina, Ukraine, and Brazil in the case of corn, Ukraine, and all the rest of the world in the case of wheat. So that's a challenge for us. When I think about the major events impacting agriculture in the last few years, I think about the 9 billion people problem, and that ultimately says by 2050 we've got to double the amount of production we have in agriculture to feed those people because they're changing in diets. We have a change in geography of agriculture where we have more and more South America and Europe, so like this. We have increased differentiation in demands. We used to talk just about commodities, corn, soybeans, then we talked about GM versus non-GM, and now we talk about organic, and we talk about consumer segments that are different, some of one non-GM and GM, etc. We have radical changes in our logistical system. We have changing technologies in agriculture, which is really, at least in the past, given the United States a pretty substantial advantage. Used to be, gave us an advantage about 7 or 8 years, now probably more like 4 or 5 years. We've had a radical change in the structure of the industry, which I'll speak about here today. And we've got to be talking about climate change in agriculture and carbon and sustainability and all of these things. So this is all stuff going on in agriculture. Here's kind of my world of agriculture. Probably every day when I think about it, we got North America, Canada, and the United States becoming more like North America. We got the Russians trying to dominate the world, the soybeans being dominated by Brazil. We got these Ukrainian guys down here trying to double their production. So that's the world of agriculture today. The things I want to talk about briefly here are listed, and I'll just speak to each of them with a couple of slides. Probably one of the most important technological innovations has been GM technology. I use this slide all the time. Talk about changes, in this case, in the case of corn. Look at how the Corn Belt changed from the year before we released GM corn until the more recent years. In the middle, you can see what's happened in the Midwest and Red River Valley, where the Corn Belt is basically moving northwards and westerly. Here's the same in the case of soybeans, where we're now growing soybeans on the Canadian border, as robust as any other place within the Midwest. And that's all a direct result of genetic modification and technology. The biggest challenge to GM technology is the following. Producers love it, but consumers don't universally accept it. Generally universally accepted within the Americas, but once you go outside of the Americas, that's not always the case. Ironically, So there's this group in Argentina that's just created a GM wheat that's being, is Australian technology being developed in Argentina. It's going through the commercialization process now. This is a quote from the owner. He said, the world is, this is a drought-tolerant wheat. The world is too dry and hungry to snub genetically modified wheat. And he says that as a quote. The next week, the Brazilians set up the biggest law to import it into Argentina, imported into Brazil. So just the other day, we got this love and hate affair with China, because we've got to love them because we get everything from them, sell them everything. We've got to hate them because they have a lot of control over the market. But the history of GM technology in China, particularly, which was exacerbated with the Mir 162 event back in 2011. And over that time period, after that, they kind of played their regulations in such a way to effectively disallow GM technology, in part because most of it was Western, non-Chinese technology. And just this week, I think this happened just this week, December 5th, this is pretty close, right? Just this week, the Chinese are relaxing their regulation in a race to become the biggest GM producers of corn in China. And if you read the stuff on the right-hand side, they want to have Chinese leaders in GM technology. And there's two companies that are doing it. In the lower right-hand side is one of those companies, and that is headed by the individuals who were caught stealing corn from fields in Iowa 5 years ago. And this is a headline in China just this week. So this is a big challenge for us in GM technology. And we're going to talk about Russia and Ukraine. I've been involved in Russia since 1991. I learned a lot by being there, and I continue to learn a lot by it, but back in the early 1990s, Russia was a grain importer. Prior to that, they were a grain exporter for a while. Now they've become a pretty ferocious grain exporter and dominate about 40% of the world wheat market. And that shows their market shares on the lower right-hand side, both for Russia and Ukraine. And that's a huge challenge for us. Here's some headlines in recent time period. That one on the left was from Bloomberg. And it was in June, a few years ago, June just before Putin put in place an export tax. And they talked about how Russia was going to come to be dominant in the world wheat economy. And I was in Dallas at that time. And secondary car market values went from $0 to $3,000 just like that with that announcement. So that's how important what goes on there. Now, in the past 9 months, Russia has been trying to formalize a mechanism of export taxes. And the reason for that is Putin wants to keep food prices cheap in Russia because of the kiss of death in that country is they have too high of food price inflation. And if we export everything as a dominant exporter, we're going to have food price inflation. So we impose a tax which is 70%. For every dollar over $200 a ton is 70%. So that started last year in January, and it's been continuing since then. These are the major things in Russia and Ukraine that impact us. Just as we look at Russia fiddling around with Ukraine on the border, the issue is that Ukraine wants to become part of the European Union, and Russia doesn't want them to become part of the European Union. And so it's the largest countries within Europe. They have an economic crisis. They have these Soviet legacy farms called kolkhozs, which were 50,000 acres, and they were all liquidated and sold into the world marketplace in the mid-1990s. And so we've got these large farms which are evolving to be pretty low-cost and efficient farms. Corruption is overwhelming, completely overwhelming in both countries, but particularly Ukraine. And as we speak of China, just pay a lot of attention because part of this Belt and Road Initiative goes through Russia and Ukraine, and a big channel of grain trade today is in the Russian Far East by overland route to China. Having said that, one of the biggest things going on in that country today, in Ukraine, is freeing up the land market. So in Russia, you can own farmland, but in Ukraine, you can't own farmland. When they broke up the Soviet Union in 1991, in Ukraine, they said, whoever owns the land at that time owns it forever. That was the law in 1991. So these were all like small parcels of land of 5 to 10 acres, something like this. And then I'm on the board of directors that owns some farms, and that's why I know all this. And it's a New York hedge fund, actually. And then over time, what's happened is they need to borrow money from the international community, particularly the IMF. And the IMF has said, we will give you $7 billion, but you've got to free up your marketplace. And one of the big things you got to free up is the farmland market. And the Ukraine said, great, we'll free it up. And if you remember when Zelensky was in New York meeting Trump a couple of years ago, right now, he was meeting with people involved to figure out how to do this. So they proposed freeing it up. And one of the provisions was to allow it to be sold to anybody, whether you're domestic or non-domestic. And it wasn't very long until the oligarchs who control parliament said, we don't like the idea of Westerners owning farmland in Ukraine because we would rather own that farmland. So it didn't take very long until the law was changed, and the law currently exists that farmland can be sold, but only to Ukrainians. And in July of 2024, it could be sold to Westerners. So there's a transition period. In that picture on the lower right-hand side, if you can read it, that's in the Ukrainian parliament when they were fighting over this issue. Because, of course, landowners want to sell it to the highest bidder, and oligarchs control the parliament, didn't want that to happen. So it's a big fight. So that's what's going on. But this isn't really a permanent shift in agriculture because they're low-cost producers, and particularly the Ukraine, they have very low-cost logistics. Their cost of shipping is about $15 a ton compared to $50 a ton from here. So it's a pretty big deal because they can penetrate most of Europe, North Africa, and the Middle East, and now China. There's a linkage, I'm sure, that will be developed if Putin lives long enough to make that happen. But there's going to be some challenges because there will be upward pressure on their costs as we go forward. Well, what's significant about it is they control 40% of the market. So anytime there's an intervention, it has a big effect on the market. This slide is from my friend Vince Peterson at U.S. Wheat Associates. But all of those bars, those vertical bars you see there, are times when the Russian government has intervened either with an export quota or an export tax. And on average, whenever that occurs, the world wheat goes up $1 a bushel, on average. Last time that happened was January of last year, and that's exactly what's happened. So when they start intervening, given their size, they have a volatile impact on the world marketplace. Ironically, I had a call the other day from a friend who's at Agribusiness. He wanted to talk, he says, you know, the Saudis are going to be having a tender this week. The Russians are not exporting because of export quotas. Australia's got poor quality wheat. Canada's got Vancouver floods. And European Union was out of the market. And he was trying to figure out how Saudi was going to have an export tender in that environment when the only source of supply was the U.S. So this is just a headline. So then we got to talk about this. I don't think you can talk about agriculture nowadays without talking about this. And of significance here, that red line is the Chinese pace of imports of soybeans. They're about 100 million metric tons right now. They're the biggest supply buyer by far in the world. And if you say don't sell to China, there's nobody to sell to is what it really comes down to. And so they're really significant. They buy about 60% of the world soybeans from North Dakota. This is soybeans exported out of Pacific Northwest. You can see the next biggest market is next to it is Taiwan, Vietnam, and Philippines, hardly anything. So if you take away the Chinese market of soybeans, for whatever reason, political or economic, it has a huge impact. Because in our case, about 75% of the soybeans grown in North Dakota end up in China. That's how significant and important it is. And I have this slide here because this is corn. And just historically, prior to about 2011, they were importing about 3 or 5 million metric tons a year. And then in, I think it was 2010, USDA made a projection that they would increase their imports to about 25 million metric tons because of all the changes going on in that country. And then we have Year 162, so everything kind of stopped at that time. And everything's been stalled at about that 3 to 5 million ton range until this past year. And they're now at about 30 million tons. Of course, the big guessing game is what's going to happen in the future. That's a huge deal for the world market and for the United States because we're the lowest cost supplier to that country. I want to speak about these topics just briefly, and then I'll kind of zero in on some things. I don't think in today's world you can talk about agriculture without talking about what's happened to ag input costs. You can see fertilizer prices have increased by a factor of 4. Glyphosate and other chemical prices have increased by a factor of 4 or 5 since last November. And just this week, the Purdue Agricultural Economy Barometer points to be very, very negative. Go from up here, this is an index of how good farmers feel about the agricultural economy. You can see how it's fallen, and they directly attribute it to this escalation in ag input prices. I don't know what's going to happen to this in the future. It's very drastic. It's going to have a huge impact on the marketplace. We got this thing here called ESG. I have to speak to it. I don't want to necessarily like to have to embrace it, but this is a reality. It's called sustainable, environmental, social, and governance. And there's now big pressure on companies around the world to conform to some type of ESG standard. We've got to like to pretend that doesn't affect us so much. In Russia and Ukraine, our farms are all conforming to ESG standards. And we have big arguments about it because it's going to cost us money. You know what the managers tell us? We have to do it because the driving force is not the companies, but the driving force is the international bankers. And if we don't have access to international funds, we're not going to be able to operate our farms. So we're going to have to be driven by that. That was pretty enlightening to me. And one of this thing here is on social and environmental, and it's pretty critical. And I'm on boards of directors of a couple of companies, and there was one of them that's a private equity company, and we were sitting in a meeting, and there was 12 males and 2 females. And the guy hits me and says, you know, I was at a meeting like this yesterday in California, and if we were like this, we would have to disband the board of directors because we did not conform to social standards. And I rolled my eyes. And just the other day, a student of mine operates a large shuttle operations out west here, and he called me up and we were talking about some things, and I mentioned this issue here. He said, it's funny you asked that. I had a phone call, a visit from a major international buyer last summer. And they asked me about a lot of things because I'm a big supplier to them. He said he asked me something that I didn't know how to answer. And you know what he said? How many of your farmers are female? Couldn't believe it. Couldn't believe it. That this ESG is going down to that level. And you know, the way it's going to affect us around here is that big buyers in the world are going to demand that their suppliers are ESG conformance, which includes things like diversity in the workplace and conforming to environmental standards and all of these types of things. So this is a big challenge. So this is a book we read here, ESG Investing for Dummies. But this word sustainability is pretty important, and we're going to hear a lot about this in agriculture for a lot of years to come. And I'm kind of involved in this, but I try to go back to the origins, what's driving this, because hardly a conversation can go by without this word coming up. And the nearest I can tell is this is a survey done by Cargill. And they did a survey last year, and they found that 37% of the consumers would be more likely to buy products with a sustainability claim, and that was an increase of 6% versus 2019. So they're pointing to that thing right there, called Millennials' View towards the importance of sustainability. And I believe that is the survey that's driving all these food companies to say, we want to be able to label our products as being sustainably produced. It's going to be a big challenge for the industry, and I think many companies are responding to this now. We'll see how it happens in the coming years, but I think that's a driving force. Now, there are many agencies in the world, or in the world and in this country, but it's growing more in this part of the world as well, that are certifying suppliers as being sustainably produced agriculture. And probably one that I don't have a slide prepared upon, but one of the biggest impacts probably going to affect this region of the world is the European Union policy called Farm to Fork, where they have a lot of provisions about requiring suppliers to have set aside 50% reduction in fertilizer and a certain percent reduction in farm chemicals, and they have to be certified to supply food to the European Union. And people who analyzed that said that the effect of that is going to make the European Union a very large importer of commodities in 10 years' time. So then we have this world of carbon, and I'm sure you talked about it at this convention here. Everybody's talking about it. And this is being precipitated by the Paris Accord and climate change and all this. And everybody's trying to invent ways to buy carbon credits, and agriculture is one of the ways to get carbon credits. And companies are creating schemes that allow them to buy and acquire carbon credits and say that they're going to be carbon neutral. So that's how we're going to be evolving. Probably as important as that is this word called RD and SAF. These are words we didn't even know a few months ago. So renewable diesel is a type of product produced from oil seeds. And soybean oil is one of the cheapest stocks to conform to the California clean air standards in the form of renewable diesel. In this country, there are 18 plants proposed to be built to manufacture renewable diesel. One in Dickinson by Marathon, another one up in Williston, and 16 others. And that's what brought about a soybean crushing plant in Spiritwood, and one being proposed in 2 other cities in our state alone. Taken together, renewable diesel, if all those plants came to pass, would require another 7 to 10 million acres of soybeans. So that's like saying, given how many soybeans we are growing in North Dakota, we need another region as big as North Dakota and South Dakota combined to supply that industry alone. So I used to work for one of the companies that's here, I won't say their name, but we used to talk about the word battle for acres. Battle for acres, because there's all these new uses of crops, and we're going to have to fight for these acres, and we're going to have a huge battle for acres revolving around this in the coming years. This is out of the CHS most recent magazine of the proposed plants coming about in renewable diesel. And then I was with someone the other day, actually doing a project for them on this exact topic, and they used the word SAF. I said, SAF? I didn't know what he was talking about. SAF. And then I come to discover it's called, before I get to that. Well, here's what happened to renewable diesel. When that policy came out, this is soybean oil, went from 10 cents to 70 cents. 10 cents to 70 cents. Soybean oil is in every food product in the world. And that's how soybean prices have moved in response to this. So then we get this thing, sustainable aviation fuel. And we kind of chuckle at that. What does that mean? That's a high-tech fuel product made out of vegetable oils, mostly soybean oil. And so we don't want to joke about it. United Airlines on December 1st made the first flight with 100% sustainable aviation fuel. And aviation apparently is one of the sectors that if they fully adopt this sustainable fuel, it will reduce carbon substantially. That article there says that if this was fully adapted in North America, it would require 20 to 30 million acres of oil seeds. How about that? Okay, so back up. So I'm going to talk briefly about this topic. I always debate whether to talk about it or not. It's pretty interesting, and I'll share with you. And I think Neil Fisher is here, but what got me interested in this is a few years ago, they had me speak to their annual meeting, and they said, tell us about who sells America wheat. I mean, who's the seller? We know who the producer is, we know who the buyer is, but who's the seller? So I prepared this speech, and I kind of went back through this history because it's pretty interesting evolutionary change. And in 1980, Dan Morgan wrote this famous book called Merchants of Grain, And he talked about the big 5 companies up here and the characteristics of those companies. 1980, they were all private, largely family-owned, and largely non-transparent. Because they're private, they didn't have to report any financials. Because we didn't regulate the commodity market and industry, we didn't report export sales, and all this stuff. So this was the big 5 in 1980. And then by this time, we come to use the word ABCD. So what happened? Andre went bankrupt because it's hard to be big as a family-run company. As the business gets bigger and bigger, as a family-run company, eventually you're going to run out of money. Andre didn't do that, so they went bankrupt. Bungie went public. Cargill became an ESOP. Continental was acquired by Cargill. ADM entered as a public company in Dreyfus, sold half of their company to Abu Dhabi Fund. So we now call it ABCD. This is the 1990s. And what's important about them is they're big, they're publicly traded, they're very vertically integrated. They have to, because they're publicly traded, they're more transparent in their trading, export sales, and reporting weekly. So then what's important about this is the following, is that it was always said that the economies of size for these private trading companies was economies of size because they had big elevators and a large number of elevators, and they had information that nobody else had. They call that the economies of information. So information is a high fixed cost, marginal cost is very low, but that gave them an advantage to everybody else in the world, including you guys as farmers. So we call those the intangible economies of scale. And then in the 1990s, there was a famous article here with these guys, and then my article, and we argued that they've lost their economies of scale. Farmers have built more and more storage so they don't have to sell, and information has become more transparent, so no longer do they have, and we call the word asymmetrical informational advantage. Okay, so then what all this comes about is that their advantage to access the information is lost. So this is a book that came out just last spring. It's very, very interesting. If you're interested in this topic, it's a very good article, book to read. These guys work for Financial Times and Bloomberg, and they talked about all of this and the increase in the number of competitors. Now we say the trading companies are ABCD, plus CHS, Kafka, Gavilan, Glencore, Olin, Boomer, and 15 Russian-based trading companies. So we're talking very, very intense international competition. In the most recent book this summer, this is an ex-Cargill guy called The New Merchants of Grain. It talks in detail about the history of all this stuff. And if you've been in the business for a while, you'll know a lot of the names that he's talking about. And he makes the argument that what's happened is the industry's lost a lot of money because the margins are too volatile, because the marketplace is too volatile. We've had many new rivals and new entrants, and they've lost their market power because information is more easily accessible. Farmers got storage space and farmers got information so they don't have to sell. So it says all of these companies' strategy is downstream integration. So they're expanding. Ironically, listen to the story. I want to become involved in value-added agriculture because the margins in commodity agriculture are too volatile. And by being involved in value-added agriculture, we reduce the volatility of those margins. And that's what he describes all these trading companies to do. So as many of you know, and some of you have been part sponsors, we have a commodity trading room at NDSU, and I show it to you here. This is the trading floor at CHS. This is our commodity trading floor. And we do this all the time. And I had a former student come in who's a senior person at one of the companies I mentioned earlier. And he says, you know, Bill, in this trading room, you have access to as much information as we have, and we're the largest trading company in the world. That's what he told me. And I said, you know, it's pretty amazing. What it says is that no longer do they have an advantage of information that they used to have. And that's why they're trying to pursue other strategies. Well, now what's important is everyone's got information, is how do you analyze it, how do you interpret that information. So we're starting to do more and more artificial intelligence in our work, ironically. That's when they talk about me, Ron, that's artificial intelligence. This is a student of mine's thesis trying to predict basis values for soybeans at the Pacific Northwest and secondary farm market values. And this is a quote from the company, I won't say who, and they said that blank, blank, blank has invested significantly in tools such as artificial intelligence and machine learning. They hired data scientists using information gathered from public sources and its own asset. That gives them an edge during major events. So they say they hired our student, Noah. He went to work for this company. He started in March, he's already had 2 promotions. So that's good for him. But this is his model. And the point I'm making is that everyone has information now. The advantage in the future is who can analyze that information better than somebody else. So in China, we have these guys called COFCO. This is another love-hate relationship. And this is a headline in the Chinese Asian Wall Street Journal called "The Chinese Want Their Own Cargill." If you read through all of this, what the Chinese says basically, we don't want to depend upon Western companies as a source of food for our economy. So they configured a regulation around this company called COFCO, and COFCO proceeded to acquire Dakota, Noble, and others. They have 6 of our students working for them in Geneva, and they're now one of the biggest trading companies in the world. I do a lot of work in Mexico, as some of you probably know, and one of the biggest suppliers of wheat in Mexico today is COFCO. So they're intended to be an all-right trader. It's my understanding that they're planning an IPO in the coming year, so then they will be independent of the Chinese government. At the moment, their funds are guaranteed by the Chinese government, so it's kind of like a Canadian wheat company. And not to be outdone by them, Russia wants their own grain trading company, and that's called United Grain Company. That's owned by a company called VTB Bank. VTB Bank is controlled by some oligarchs. Oligarch means friend of Putin. And they want to create their own grain champion, and they don't want to depend upon foreign trading companies. So now it's my understanding that they control 70% of the exports from Russia. That's pretty substantial. But international trading has become very, very competitive. This is actually from a student of mine's thesis. She was here earlier today, now she's gone already. But I want to talk a little bit about competition between countries. And I mentioned it when I started, that the competitive environment has become very, very intense. So take a look at this chart here. This is her thesis, but this is the basis values from 2002 until current daily for 5 origins in the United States on soybeans and 5 origins in Brazil. So you can see back here in the early 2000s, the basis in Brazil was extremely volatile and extremely seasonal. And over time, that seasonality is still there, but it's lessened, and their basis values now are very, very, very competitive to ours. And now when we analyze prices delivered China from North Dakota and elsewhere through the PNW US Gulf versus Santos in Brazil, we're within pennies per bushel delivered. And that's how intensely rivalrous this competition has evolved in the case of soybeans here, and similar in the case of corn, notably pointing at the Ukraine. This was in Thomson Reuters 2 days ago. Now read this headline. This is the price of soybeans in the United States and Brazil, PNW and Santos. This is ocean shipping costs. This is the price delivered China. Look at how close they are. Look at how close they are. So for a few months, we're the cheapest price. For a few months, they're the cheapest price. Look at that headline. Higher average protein levels make Brazil's soybeans more attractive for Chinese crushers. That's our challenge. Because of logistics, our delivered costs are coming to be very, very comparable to each other. So the difference in suppliers' competitiveness is becoming more dependent on quality. So I'm kind of watch my time here, skip a few things. I want to make a few comments on technology. We have probably more investment occurring today in agriculture technology than we've had in my career, at least. And this traditionally has been through the public sector, but in recent years it's being done more and more by the private sector, notably private equity funds and venture capital companies. And what's important about that is that gives the United States an advantage. Because typically speaking, new technology is firstly introduced in the United States, partly because it's developed here, partly because we got better institutions of intellectual property protection. So I use this because some of you know I used to be on the board of directors of the Minneapolis Grain Exchange. This is the old way of trading with blackboards, and we had to be in the pit, and then we got electronic trading board, and then we moved up over here to electronic trading completely. We closed the pit. And I was involved in that decision. There were two reasons we did that. Because electronic trading is more accurate and lower cost. And you think about all technologies, in many cases, everyone comes out to more accurate and it's lower cost. And that's why it's adopted. This was in the Financial Times just a few weeks ago, and they're talking about trading technologies and algorithmic competition of location. And the new technology allowed a trade to be executed in 29 milliseconds instead of 33.5. And that was going to give the trading company an advantage. That's how drastic this is changing. So we have this technology that's emerging in all of these things in logistics. Here's the Panama Canal. We were involved in that one in 2004. Now they got expanded again. We've got shuttle elevators, which you all know in this part of the country, which have taken over the world. BN system probably is about $35 billion invested in it, about $30 million for every one of these. All built around 110 car shipping. Reduced our shipping costs by about 30%. Just a couple of weeks ago, I was at this grand opening, CP Rail now wants to expand in the United States with 147 car trains to lower their shipping costs an additional $300 to $500 per car. Pretty substantial. And so then we got this rapid change in ocean shipping costs because part of the pandemic, or probably more important than the pandemic, because of oil prices. But what's important here is the spread going to Asia. This is the U.S. Gulf versus P&W. And anytime that goes about $20, we're now at about $40. That really means that everything in North Dakota, Minnesota, South Dakota, and Nebraska goes forward because ocean shipping costs favor that market so much more. Unfortunately, this is the advantage that Ukraine has over the U.S. Gulf going to China. And normally they're about a $2 or $4 ton advantage. Disadvantage, now they're about a $7 ton advantage. I'll skip a few slides here because I'm watching the time. All of you are on precision ag, and I just missed a slide I wanted to show you, but I think most people are adopting precision ag mostly because it gives a good return on investment. This is from our manager in Ukraine. He says, people, even you got all this technology, people are the main driver of profit. No technology can replace a good farmer. And here he's talking about the stupid GPS who puts them right in the middle of a bunch of sharks. And Nate Moody, an ESU football player, now at Gavilan, student of mine, prepared this slide. Said, even they got cool products, doesn't mean they're going to sell. And I think, generally speaking, technology developers have to create technologies that give farmers an advantage return on investment that's in double digits to induce them to adopt that new technology. At least that's what we teach. I'm on the board advisor of this company here. Many of you know about them, probably many of you use them. When you think about bushel, it's kind of a nice story from North Dakota, but they really got a monopoly on these signatures. And that was started by 3 NDSU people. Now they got, this says 170 employees. After a recent acquisition, they now have 220 employees in downtown Fargo and having a pretty big impact on the supply chain, and particularly between elevators and producers. But if you think about what Bushel's doing, it's lower cost and it's more accurate, just like electronic trading of futures contracts. So I'll skip over this. So now they got about 2,000 users. They got 40% of the grain in their system. It's probably the leader in that segment, though there's lots of competition in there. So the last couple of slides. So risk now is greater than we've ever seen before. I have a chaired position in risk, so we teach risk. All we ever talk about is risk and risk modeling and all this. This shows the basis here of soybeans and the basis for spring wheat. And every textbook in the world of futures contracts says use futures trading because the basis is constant. Take a look at that and try to explain it to somebody that looks like it's constant. Our bases are very volatile. In fact, the basis today is far more volatile than ever we've seen before. Meaning, even if you're fully hedged, you still got lots and lots of risk that we never used to anticipate dealing with. And Greece futures market just a few weeks ago prepared for my class. I don't know if this is spring wheat. This bottom line here is a measure of volatility. Just this past year, the measure of volatility, that is risk, increased fivefold. Increased fivefold. It's as risky today as I've seen in my career. So what do we do about it? We teach a methodology called value of risk. It's used by most trading companies in this country and around the world, larger trading companies. I try to bring it back to a more accessible version. But the concept behind it is this might be a probability distribution of my profits. And this is what I'm expecting my profits to be. And this red triangle is the area called value risk it's like saying, what is the most I could lose? So what we're measuring is, what is the most you could lose in a certain period of time? Can you imagine working with your son and your son dad says, we should do this? He says, well, what's the worst case scenario? That's what we're measuring, the worst case scenario. So all the big trading companies have this. I have students working at every one of the companies, they do this. And I asked Jason, who was at Gabla, now at Cargill, doing this. I said, can't you create this in a spreadsheet? Because we got this trading room with 34 computers. Can't we just tie it together and read the information? So we created an XLS. I now teach it in my class. It looks exactly like this, and it's using the methodology. There's a lot of calculations there. It updates all the information from our trading room digitally and estimates the value of risk. And here's a North Dakota farmer in 1971, 175,000 bushels of crop. And if he's unhedged, our measure of value of risk says that in the next 30 days, the most I could lose is $362,000. I love teaching this to the spouse of farmers. I love that. Don't worry about it. The most I could lose is $360,000 in 30 days. How confident are you? I'm 95% confident that's the most I could lose. And you'll be quickly figured out how to manage risk after that. But if I were 100% hedged, that measure is $2,300. So that's the way we're teaching risk now in our program, and hopefully we'll have some success at it. I could imagine a world in the future that would be a phone app. I could just imagine that. So, summary, I can hardly read that. So we got very robust demand in agriculture. We got differentiation in demand. We got lots of opportunities on the demand side. We got major changes in technology, which give us an advantage compared to everywhere else in the world, maybe for 3 or 4 years or something like that. But we have very intense inter-firm competition, and probably my concern is that we have very intense interventions by numerous big countries now, more than ever before. China, affecting soybeans, corn, affecting Brazil, expansion in Russia and Ukraine. We got Russia and their export tax. We got the United States with our RFS, climate change, and the Trump farm payments. We got the EU and this thing called Farm Reform. Those are bigger interventions in agriculture than I've seen in my career going back to the 1970s. But the United States performs extremely well in a comparative environment. If we don't have intervention in the marketplace, we perform extremely well. We have technological advantages, institutional and logistical advantages relative to every other country in the world. But when countries start intervening and creating turbulent times, it makes it more difficult for us to compete. So with that, I'll close. I suppose, Lucy, if you want me to answer the question, I'd be happy to, as long as you don't try to embarrass me. So thank you.
I just would like to ask you, with the going to all soybean crush diesel fuel, would that be something that we should all be supporting? I mean, it's not really feasible, it's not sustaining, but it would really help us all out with our crop marketing.
So I've not studied the answer to the question you're asking. I've not studied that. There's no doubt that this is good for agriculture. There's no doubt at all. This is fabulous for agriculture. I'm not certain it's so wise as a domestic economy Because ultimately this is causing food price inflation. And we've seen that since January. And you start shoving 10 to 20 million acres of soybeans in the United States in the coming 5 years, it's going to create havoc with all of the other commodities that are growing. And that's going to result in food price inflation. It's going to create a battle for acres. And I don't know how that's going to all unravel.
The
At the
byproduct,
moment, there's a huge amount of momentum in that direction.
the byproduct of the crush, though, is meal. So the meal can be used for feed for feeders.
Most of that will have to be exported, and that'll be a big challenge. So I'm not trying to paint a rosy picture for you. I'm just talking about the mammoth changes. These are mammoth changes we're talking about. Yes. Oh, you.
Oh, me.
Good to see you.
It's good to see you. So, since 2015, the number of starving children on the globe has increased. It had been on a decrease until then. The number of deaths globally of children and of all people have increased dramatically the last 2 years. And with all the social green evolution, and the EU is going to be, by the 2041, is going to be 50% of their food needs are going to be imported to the EU. How's this all play out?
It's going to, I'm guessing, it's going to be very, very tragic. And this goes back to when ethanol was first invented, and we have a fight called food versus fuel. You saw it on one of my slides, and I skipped it over. This is going to be a food versus fuel fight. And when this current administration, I don't believe they have an answer for the question you asked. I asked them, they had me in for a think tank in March at a lower level White House meeting, and I asked them, when they described all this, I said, you know, have you thought about food price inflation? And there was no idea what that means. That was in February. And by June, we're at $20 barrel, the most staple food in the world. And price of cost has doubled around the world. I just know, because I know that number very well. But that soybean chart, where we go from 10 cents to 70 cents, soybean oil is in everything in the world. And so I don't believe the current administration has a plan for the things I'm addressing. I don't have the answer. I think it's going to be very challenging, but it's a great opportunity for agriculture. But it's not going to be a perfect storm on how this unfolds here. It's a big problem. And Jeff talked about the European Union. I have to emphasize, he gave a precise number on this, but this Farm to Fork, it's called Farm to Fork, and the European Union, that's going to become their new common agricultural policy. It requires a set-aside of land, a large reduction of fertilizer use, and a virtual elimination of foreign chemicals. And your number said by 2041, they would be a net importer. Keep in mind, they're the biggest supplier to Africa. So this is going to be a mammoth change. So my view is, Jeff, we need all the technology that I had up here. We need all of that and more. Okay.
But the UN is mandated that we're going to go green and organic.
Yeah, I know.
I mean, you can go on their website, you can
I
look
know.
at the green pages.
Yeah, I know.
It'll make everybody in this room go outside and find a garbage can.
Yeah. It's a big challenge. Let's leave it at that. Other questions or comments? Lucy, go ahead.
What do you see happening? You said 75% of the soybeans in North Dakota are exported now. This plant comes on, Marathon and Dickinson. Does that take all our exports away? What happens?
Well, not all of our exports. So no one knows for sure. This will be offset by increasing productivity and yields. It'll be offset by taking some crops away from other crops. So part of that, but we'll probably have reduced supply potential for the offshore market. And our probably bigger challenge is how to export more meal than we currently do. As I remember off the top of my head, the combined meal output from the South Dakota plant and Superior would require a fourfold increase in the amount of exports of meal off the West Coast. That's going to be a big challenge. Other questions or comments? Okay, Lucy or Jeff, thank you very much. I'm glad you invited me. I was happy to be here. Thank you.